imagine. So let's throw it open to audience questions. Do we have a roving mic? Yes, no? Nope, this is all right.
Stand up.
Go ahead.
Okay, so there's an 800-pound gorilla question that you guys haven't talked about, which is secondary trading. So let me create a dilemma. I can see someone nodding, and I'll be talking to my friend Mr. Redford in a couple of weeks about it because this is a big deal. But the issue is that there are many exchanges, and I would usually do air quotes on them because they're not really exchanges, that trade crypto. They're actually quite far from exchanges, both in terms of not being broker-dealers, ATSs, and certainly not exchanges with everything that implies. But they trade hundreds, if not the full 1,000 ICOs, and investors can get liquidity. If you choose to do a Reg A Plus offering or a Reg D offering, there is no liquidity. You can't list them on any of those exchanges. Now, obviously, that's one part of the dilemma. The other part of the dilemma is if the SEC does rule, as was suggested in Twitter today, and I think you were on this thread, Ryan, that Ethereum is a security based on Vitalik Buterin's importance, et cetera, the fact that it's an ICO, and all of these things are securities, then arguably all the investors in cryptocurrencies, with the exception of pure Bitcoin, their liquidity goes poof. Now, I would like to think the SEC won't do that, but I can't see a way forward without exemptive relief or rulemaking. Can anybody on the panel?
You two are definitely the best for that one. No question. There you go.
That's a good question.
I don't know why you were so eager to pass me the mic. I'm not nearly as knowledgeable, I'm sure, as these other three on this particular topic. But I will say there are definitely exchanges that are now coming out. Templum in New York as an ATS, Polymath in Canada, I'm not sure quite what the regulatory positioning is, T0, right? Those are coming, right? And I think the next milestone will be what's the first successful Reg A Plus offering. In terms of secondary trading, I kind of feel like it's an existential type of risk for that whole market because of how quickly everything could freeze overnight. So I agree. And basically, my co-founder and I, we just started this company, but we've been banging the drum basically since the November comments from Clayton saying these all have the hallmarks of a security, saying we have a very short window to get ahead of this before the SEC just comes in and says enough's enough. Too many people have lost money, or we've seen too many examples of fraud, and they just, instead of taking a facts and circumstances approach, as they have been, just clamp down on the choke points, which are these unregulated exchanges, to your point. So there's a silver lining there, which I think that fear that's in the back of everybody's mind has made even the most libertarian crypto anarchist very, very eager to engage and think about what self-regulation would look like versus the alternative, which will absolutely be much worse.
No, I'm just wondering if it's all been said. You have Templum, you have people realizing, they look at the volumes of GDAX, of Kraken, and what have you, or of Binance, and they holy cow. And they go, boy, I'd actually love to make hundreds of millions of dollars a year, and if it is going to be regulated in the United States that way, more. Well, I didn't mean collectively or individually. As a new entrant, when you're trying to pitch to your investors, so you see that emphasis. There will be overseas exchange that whether or not they're reaching out to American traders or not, they'll probably be there. The problem with that is, that's one of the rushes that we always have in regulation. You want to do it right so that there's not a race to the bottom by consumers. And I'd say the real interesting sidewalk holding is distributed exchanges, right? I'm sorry, not distributed, decentralized exchanges, where, we're seeing models for this. They're going to happen. They have happened, and I think it's going to continue. How much legitimacy and how much uptake will be interesting. It will be long and short of it. Depending
Then the next choke point becomes the funds.
Yeah.
So, the next liquidity source that you'd cut off would be the polychains of the world and the drapers of the world and all of these funds that have invested in many cases with sizable discounts and pre-sales in exchange for lockups. Those are the dynamics that certainly
Which,
give
by
us
the way,
leverage.
Reg A plus, non-discriminatory pricing says.
Yeah, exactly. So